what the US has achieved on tariffs was something that most economists didn't think was going to happen. We thought that there would be massive retaliation against the US. There hasn't been. Europe, the UK, a number of Asian countries have all signed framework agreements. The only outstanding ones are India, Canada, and China, and there's clear progress on China. Secondly, we're collecting a lot of tariff revenues. On an annual basis, we're now looking at 300 billion of tariff revenues. Third, the impact on inflation has been limited. So if you look at what people have been worried about, the US has gotten to a fairer trading system without the disadvantages that people thought would materialize. Now, it's early days, so one has to consolidate these gains, but it's a different outcome from where many economists, including me, thought we would be.
Hey, what's going on, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Have you ever wondered what happens when the financial world teeters on the edge of chaos? Right now, a massive $2.5 trillion shift is rippling through the markets, and it could change everything that you know about money. The solution, well, it's already here, quietly waiting in the form of a digital asset that's about to take center stage. But the time is ticking, so you got to stay tuned to uncover how this could impact your crypto future before it's too late. We're going to head over to X to find out all the breaking news that's happening in the crypto world today. And we'll be looking at important levels of resistance and support you need to know about right now. Plus, we'll be looking at our long-term and short-term momentum waves and so much more in today's video. But first, let's head over to CoinMarketCap. Check out the overall health of the crypto market today. We are currently trading at $3.85 trillion, which is down 0.5% in the last 24 hours. Volume definitely picking up now at $169 billion in trading volume in the last 24 hours. Fear and greed index ticking into the neutral zone from fear, which is really positive news, 42 out of 100. Altcoin season, unfortunately, not doing so hot, 27 out of 100. Bitcoin dominance leveling out now at 59.1%. Top 6 cryptos by total market cap. Number 1, Bitcoin at 113,900. Number 2, Ethereum at 4,100. Tether at $1. Number 3, XRP at number 4 at $2.63. BNB now at number 5 at $11.37. And Solana at number 6 at $198. As you saw in the intro of the video, all of the economists who said the tariffs were going to ruin the economy are starting to admit that they were wrong. Here we have economists from Wharton, very prestigious business school, says that tariffs achieve something economists didn't think about. We thought there would be a massive retaliation against the United States. There hasn't been. We're collecting $800 billion in tariff revenue. Inflation has waned off. Now, what is interesting is this is the first president, and he tried to do this in the first term that he was in there, but this is the first president who has used the leverage of the strength of the United States economy, aka the buying power of the United States people. Our country is full of people that love to buy stuff. And other countries, yes, they may be manufacturing them, but they need the United States to be able to sell those products into, because we're consumers and we just waste a bunch of money on junk, as you know. Well, most presidents in the past have not understood the actual leverage that provided our country when it came to negotiation power. And now we can see Trump utilizing that with the tariffs, essentially saying, okay, China, okay, India, you want to sell our citizens all of these products that, even though we did ask you to make them, you're going to have to pay the tariff to sell it back to us. Now, some people in the economy at first thought, oh, well, if I'm a business owner and I have all my products manufactured in China, then that's going to ruin my business and I'm going to have to hike my prices up 5x higher. But in reality, all they had to do was talk to the supplier in China and say, hey, by the way, China supplier, I'm no longer going to be able to make this product and sell it in the United States because it's going to be too expensive. I need you to cut your prices down. And sure enough, they did that. So the symbiosity is continuing and business is thriving all the way around. And the United States is coming out on top with these new trade deals. But there is a secret economy emerging right now as well. The entire United States economy is 7 companies sending trillions of fake dollars back and forth to each other. And Adam on X took it a step further and made the actual graphic here. This isn't a joke, by the way. This is actually the U.S. economy. That's currently going on. Right now, we're going to start getting these manufacturing and some hard goods back in the United States. But this is actually what's going on. So you have NVIDIA in the middle, which is a $4.5 trillion company where everyone continues to send money to. And then NVIDIA takes the money that they're receiving as investments from all of these companies, and then they invest in this company, and then they invest in this company. So each one of these companies are investing in each other, and they're just continuing to flow money to each other, propping each other up. Because remember, this economy is based on the internet. There's no hard goods except for NVIDIA's processors that they're making. But remember, NVIDIA doesn't actually make the processors that they sell. They're actually just drop shipping the item. They've done a phenomenal job of becoming this company that says we sell this product, but in reality, they're buying it from Taiwan, and then they're shipping it out to these companies who are buying it as a full package, because everyone's building their AI using the NVIDIA processor. So this is the reason why a lot of people are saying this AI economy is kind of a bubble right now, but at the same time, it's different than the past because the actual income that these companies are generating on paper tends to continue to go up. Even though they are essentially investing into each other, these companies are actually still making money. And in the comment section, we see here from Alex from the post that Adam made, I find it hilarious that trillion-dollar multinational corporations are allowed to do this legally, but circular revenue is completely illegal when done on a smaller scale with smaller businesses. Absolutely insane. And Staff has a great point here, kind of what I was just talking about. If there were no customers, then you would agree it's basically a Ponzi scheme. However, let's include the 40 million odd and climbing subscribers to these service. So these companies are actually making money, as I was mentioning. At $10 each, that is nearly $500 million per month for customers spend on these services. The supply will eventually balance on the demand. And then we have the Federal Reserve's overnight reverse repurchase agreements, or on RPP, which they have dropped now from $2.5 trillion to just $2.4 billion as of October 24th. So check out this chart right here. As you can see, we had this crazy fall to the downside. And this is a huge deal because this facility was like a parking lot for extra cash in the financial system. And now that money is just flooding back into the market. So Pumpius did a great job of breaking this down. So let's take a listen. He says, here's what happens next. The $2.5 trillion once trapped at the Fed parking lot is now flooding into the global markets. Bank reserves are holding near $2.93 trillion, over 130 billion away from the critical level that triggered the 2019 repo crisis. SOFR stress is already visible above 4.2%. Liquidity is moving fast and violently. The XRP connection will shock you. Research from multiple institutional liquidity desks confirms what Ripple insiders have hinted at for years. RRP drains directly correlate with demand for real-time settlement assets. So literally right now, the world's liquidity is searching for instant settlement. XRP was engineered for that exact moment. So each time the reverse repos unwind, the demand for on-demand settlement instruments like XRP spikes cross-border corridors and institutional payment rails. This is not a coincidence. It's a systemic design. And if you've been paying attention long enough, the global debt spiral is happening. The United States faces a $24 to $28 trillion debt rollover between 2025 and 2027. Liquidity from traditional markets is being forced into more efficient settlement systems. And this is not just a monetary shift. It is literally a full migration of value infrastructure. And as you guys all remember, what does Brad Garlinghouse continue to call XRP and Ripple? The internet of value. While legacy markets drain liquidity, the XRP ledger's on-demand settlement capacity stands ready to absorb the flow. And this is what Ripple was built for over a decade ago under all of the NDAs that they had signed and a quiet institutional integration. Some immediate consequences. Well, XRP is positioned for institutional revaluation as liquidity migrates. Traditional market indicators begin to lose relevance. Central bank control over liquidity weakens permanently, and the digital settlement era officially begins. So as we know, Ripple, the company, has been buying company after company after company, preparing itself for some sort of scenario like this to happen. And it is in position right now to unleash the floodgates once the floodgates do open. So exciting times to pay attention to what's going on in the world global economy when it comes to money flow. And more times you continue to see this. America's debt crisis explodes. Millions now drowning in car loans, maxed out credit cards, personal loan defaults, as FICO sounds the alarm on soaring delinquencies. Now, as you know, we also have a severe problem in the United States for debt. Well, we also have Trump, who's going to be using these tariffs to help the United States debt. But at the same time, it is definitely a possibility that we're using them as the external revenue service where we could actually start to offset America's debt problem as well.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt, so this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today, and it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.
For so many years, you as an American citizen have been burdened with all of this crazy, outrageous fees, crazy high interest rates, banks being able to do whatever they want to you. And then you may have, been all well-meaning, but you got into a position where you couldn't afford something or some scenario, and then you put it on a credit card and the credit card gets maxed out, and then you get behind and then they close. And then all of a sudden your FICO score is down at 400 or something. And then you have to battle that back up for years and years. And you finally able to actually get a loan for a car in the future. All of these things need to be fixed. There's no way that our debt-based economy should be in the situation that it's in. And you've all heard the meme that, oh, I have more money in my crypto wallet than my actual bank account. And that is also why JP Morgan is now going to start allowing crypto as mortgage collateral. So you want to get a loan, you have to show that you have proof of funds or reserves in your bank account. Well, now you're going to be able to show them your Coinbase wallet or your Phantom wallet, let them know that you do have actual liquidity to back up your loan. But the big news I wanted to point out, unfortunately, time has run up for the October deadline for the ETFs. And the reason being, obviously, we're in the stupid shutdown right now. All 6 spot XRP ETF filings have reached their deadlines. The issuer list is Grayscale, 21 shares, Bitwise, Canary Capital, Wisdom Tree. CoinShares decisions were scheduled between 18th and the 25th, and now we've officially surpassed those. So now the spotlight turns to the SEC. When do they come back to work outside of this government shutdown? And will these finally get passed? Another potentially positive scenario is going on. Remember, we're also going to be upping the tariffs on China to 155% as of November 1st. Well, maybe not, because we finally might have this actual China engagement deal done. It says here, top Chinese and U.S. economic officials agreed on a framework for a trade agreement on Sunday, October 26th. President Trump and Xi Jinping have been talking, and they are going to be meeting in the coming days. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer met with Chinese Vice Premier and the top trade negotiator on the sidelines of ASEAN Summit in Kuala Lumpur for the 5th round of in-person discussions since May. Bessent came away from that meeting saying, I think we have a very successful framework for the leaders to discuss on Thursday. So keep a very close eye to the news for this upcoming Thursday. We have the potential U.S. trade deal being done, and also pay very close attention to the news on Wednesday because we have the federal funds rate. It is currently sitting at 4.25. It is actually supposed to be changing to 4%, potentially even lower, but we'll have to pay very, very close attention. What does Jerome Powell do? There is some rumors out there that because of the fact that our jobs reports and all of these reports that are supposed to come out each and every single week haven't been able to come out and get accurate data for Jerome Powell to come out and give us this lower interest rate. Some people are thinking that they're not going to cut rates, and that could throw a severe wrench in the gears of the economy. Heading over to Altcoin Pro. If you like getting reports on your crypto updates, there's a link down in the description. It says Altcoin Pro. Get started here. We have really in-depth reports for you, live calls 4 times a week to go over crypto. You don't want to miss this. Get your opportunity, set it up now. Now, as we can see here, Bitcoin just tagged $114,000 perfectly, and now it's setting up comfortably above the 115 key level. Now, this was a report that came out 13 hours ago. We do know the prices did surge pretty well today. When you're watching this video, it may be a little different, and the prices have adjusted, obviously. It is currently sitting at 114,260. As long as Bitcoin stays above 115K, the next legs will be 117 to 121 to 122. So we're looking bullish there as long as we can maintain above 115K. The monthly candle has now officially flipped green, which is very positive for the month of October for Bitcoin and Ethereum, signaling renewed momentum heading into the end of the month. And to cover the downside, dips towards 112,500 would be healthy for structure, but that's where I'd look to add and reload those longs if we get the pullback. 110K might spook some traders and puke leverage, so I wouldn't rule that out. The Ethereum Bitcoin trade against itself just saw a mini breakout on the 4-hour chart, so Ethereum surging against Bitcoin, suggesting alts may outperform Bitcoin in the short term as sentiment continues to improve. In summary, market is moving higher as it reprices favorable meetings between US and countries that got tariffed. We're also adding to the CPI print, which further favors 2 more rate cuts for October and December. And then also they're going to be ending quantitative tightening, which will be huge. So we're seeing the flows of that into DeFi and altcoins as well. So we do have market updates, altcoin picks, DeFi yield picks, airdrop information, all of our wins. These are from our members in the community. As you can see, tons and tons and tons of wins, and they go on for multiple pages. So if you like getting wins inside of crypto, join more than 970 members worldwide. Does not matter where you live in the world, you can join up with our community. Link is down in the description. Get started now. All right, heading over to XRP in the charts, taking a look. So price did get exactly into where we were talking about 3 days ago, running into our supply and demand zone. We had a nice poke into it once, twice, 3 times, rejecting, but also holding strong above the 30 exponential moving average. We are on the daily charts as we look here. We were talking about this. Our short-term momentum wave had turned up, rode up nicely, and then finally that midterm momentum followed along with it. Now we are getting up to cycle highs here on the short-term cycles of the 100 level. So we're going to see if we can push through here and maintain the push like we saw back when we saw the pushes up from the $2.25 ranges back in July. See if we can get that surge to the upside and follow along with that. Now, when we take a look at our weekly charts here, we can see short-term, mid-term momentums have fully reset to zero. So this is very bullish. Once we see a turn to the upside, we have the new weekly candle that just started. There's 6 days left in the new weekly candle. If we can get during midweek a surge to the upside of our short-term momentum wave, which that's going to be the red-green lines, it starts to turn back to green. Look what happened last time. Short-term momentum turned green, which was here the week of June 30th. That's when price was at $2.25, and we surged to new all-time highs. Now, what's great is we had a new higher high here versus these over here. And with this, even though we had that huge puke to the downside with that crazy-ass wick, the actual bodies of the candles have created a new higher low. So that's very bullish for us there. And like I said, last week's candle finished green. Our new weekly candle starting up. We do need to surge back above the 10 exponential moving average on the weekly charts to give us some confidence there. Long-term momentum still continues to be very bullish on the weekly charts. When we take a look at the daily, though, remember, we were in bearish territory. So we do need to see continued move to the upside. Should be able to happen in the next 24 to 48 hours if we get some solid green candle momentum to the upside. We're looking at resistance to the upside here at $2.77. First, right now, we're actually experiencing $2.64 into our supply and demand zone. We've got to break through this and get in there. And then we get up into these levels up here at 277. And then we can start our surge up into our next level where we're going to run into that all-time high resistance at $3.42. But like we've talked about, once we poke through that level, if we switch over to the weekly candles, remember the bodies of these weekly candles, once we clear a closed body candle above this will be the new highest closed body candle in history, $3.45. Then we get into price discovery mode again, which will be really exciting. So make sure you subscribe today. You're a genius for being here. Leave us a comment down in the comments. Let us know where you think XRP is going.
Hey, bull runners, check this out. If you want to learn how to find the next 10x, 50x, or even 100x altcoin in this video, listen to this. Our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.